Magnificent Seven just hit a record 29% of the S&P 500. That is despite a drop in Tesla that wiped out more than $200 billion in market capitalization this month. I want to go from the equity scene to foreign exchange because an important note out over the weekend from Goldman Sachs, JP Morgan, and they have done some analysis. And now that we're talking more about the potential for European interest rate cuts, well, that set up the euro as a prime candidate for a funding trade, recommending borrowing the euro to buy riskier, higher-yielding currencies. And if you would have done that with, say, the Argentine peso, and that returned 8% this month. It compares 6% if the dollar was used against the yen. The trade would have returned 11%, Jen.
Yeah, Yusuf, I want to stick on FX and in particular take a look at one currency we don't always look at when it comes to emerging markets, and that is Thailand's baht. What we're seeing right now, the baht is strengthening for a second straight day. If you can take a look, well, now it's slightly down now on the day. But if we take a look at really where Thailand's baht has been year to date, it's a pretty interesting story. A lot of downside in particular because the baht is heading towards its worst January in 4 years with a loss of nearly 4% against the dollar. It had been at the end of the fourth quarter Asia's top performing currency, but now, of course, there's a number of external factors that are affecting it. Internally, it is a weaker economy and monetary policy debates that are really been dragging down this currency. What will be key to any sort of turnaround is a boost in tourism. We get data from the country later on Wednesday, but of course, so much is tied to this economy, in particular, a Chinese economy that is weak and potential delayed Fed cuts makes Thai's baht a little bit even more dismal for 2024. But let's check in on how markets in broader Asia are doing. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen, indeed, the Chinese economy will be a focus for investors in the Thai baht. But today we're seeing the property sector really being played up after we got the liquidation order for China Evergrande, the world's most indebted property developer. It now has to wind up, and the questions are swirling over how it will be carved up. And this follows a weekend where we got support for the Chinese property sector as Guangzhou, a top-tier city, eased home buying restrictions. There were also some measures to stem the selling in the stock market, but you're not seeing that playing out as the Hang Seng erases most of the earlier gains. The onshore benchmark underperforming, offshore yuan also weaker. Let's flip the board and take a look at assets in Japan as we see the energy and financial related stocks running higher there. There are a couple of big names reporting this week, including Nomura. It's expected to show it benefited from those structural changes in the Japanese financial markets. A gauge of energy stocks in Asia also hitting its highest since June 2022. This is against the backdrop of tensions in the Middle East. That's also playing out in Japanese government bond futures and the dollar yen, as all this could have upside risk for inflation and perhaps nudge the BOJ to its exit from negative interest rate policy. Yusuf.
Maybe, just maybe, we'll get that nudge. Avril, thank you for that. Avril Hong there. I want to get to our top story. The U.S. says Iran-backed militants have killed 3 service members and wounded 25 others in a drone attack in Jordan near the Syrian border. These are the first American fatalities under enemy attack since Israel and Hamas went to war. President Biden has vowed retaliation. Joining us now is Bloomberg's Paul Walsh. So, Paul, I mean, you've looked at some of the satellite imagery. You've been speaking to sources. What's the latest?
Hi, Yusuf. Yes, this is a pretty major development. The U.S. has lost two troops, Navy SEALs, since the October 7th Hamas attacks on Israel started and roiled the region. But those were not an attack. So these are the first U.S. deaths in combat, if you like, since the Israel-Hamas war erupted. This is something that Biden has been trying his best to avoid. He has vowed retaliation. I think there will have to be something from the White House. If you look at some hawkish members of Congress, they want something very firm. For example, Lindsey Graham, the Republican, he has said that the U.S. has to attack Iran directly. Now, that may not happen. Iran has plenty of assets and commanders in Iraq and Syria, and the U.S. may decide to go after them. It may see that as a slightly less escalatory step than attacking Iran itself. But certainly, I think all eyes will be on what the US does this week in reaction to these attacks, and then after that, what Iran says and does.
I'm going to recommend discipline.
Well, and Paul, I mean, the concern here was really, good morning to you. The concern was really that the U.S. was going to get involved and this was going to spill out into a broader regional conflict, especially when it comes to market. I mean, is that what
I'm going to
should be
recommend
concerned about at this point in time, considering how serious you said this appears to be?
I think energy markets are now more worried about what's going on in the Middle East. Since October the 7th, in some ways it's been quite remarkable how calm gas and oil markets have been. Brent was pretty much below $80 a barrel until last week. It's gone up and it's now closer to $85 a barrel, primarily because of the Houthi attacks in the Red Sea. And we saw a tanker carrying Russian oil get hit on Friday. That was even after the Houthis had said that they said Russian ships would be exempt from their attacks. This wasn't a Russian ship, but nonetheless, it was still carrying Russian fuel. And I think also that this attack on the U.S. base in Jordan and Biden's vow to retaliate is just adding to the bullish sentiment in the oil market. There's no guarantee that oil will go up even more from here. It's a pretty well-supplied market, but certainly I think this is a geopolitical risk that oil traders are watching very, very closely.
Absolutely, and we're looking at some upside right now, as you mentioned, for oil right now. Bloomberg's Paul Wallace. Paul, thanks so much for the updated report this morning. All right, meanwhile, our other top story, a Hong Kong court has ordered China Evergrande Group to be liquidated, a stunning legal end for the world's most indebted property developer. Let's get the latest from Bloomberg's Loretta Chen in Hong Kong. So, Loretta, what exactly happens next to Evergrande in particular?
Yeah, after this morning's liquidation order from the Hong Kong court, there is another hearing just pending in 1.5 hours. That will include the justice reasoning for why she ordered that winding up order, and also the appointment of a provisional liquidator. So that liquidation process, as we speak, will officially kick off from there.
What about the broader property market in terms of the likelihood of contagion here?
Yeah, so the China Evergrande story has really panned out from 2021 since it fell into a liquidity crunch and that led to its default on dollar bonds. I think investors have waited for more than 2 years for a sort of restructuring plan to come out, but now I think all the hopes have been disappointed. And that liquidation order for China Evergrande could mean, potentially more such liquidation order to come up, because investors have seen that a Hong Kong court is able to order liquidation of such a developer at this scale. Evergrande has, over $300 billion in debt in total, and its creditors offshore now holds more than 20 billions of debt. So that's a significant scale. I think you could potentially see more investors moving towards liquidation process, because I think they've waited too long for that recovery in China's property sector, which hasn't come despite all the support measures.
Loretta, thank you for weighing in on this for us. That's Bloomberg's Loretta Chen in Hong Kong. I want to get to the world's largest cement maker, Holcim. They're planning a spin-off of the fast-growing North American business, and it kind of paves the way for a listing next year. Valuation apparently is a ballpark of $30 billion. That is about what the CEO said in the conference call after the announcement. Holcim shares up 38%. That's the highest level since 2015 in December. Closed at 64.20 a share. You will be looking under the current plan. Every Holcim shareholder is going to get shares following the transaction in the European operations and one in the United States. Jen?
Yeah, Yusuf will be following that. But still ahead, we're going to discuss global market plays with Eric Robertson of Standard Chartered Bank, with central banks, of course, in focus. This is Bloomberg.